Welcome everybody to the Middle Class Investor this week. This is Seth Martin, your host. And well, as everybody knows, we had a very significant rally off the lows. And let's see if I can get this positioned about right. Yeah, about right there. And you know, the market fell really hard in this downtrend and broke out of our wedge pattern all the way down to here. Now this is an interesting, this is a hammer. This is what's called a hammer. So when you have a really long shadow and the body's at the top of the candle and it's in a downtrend, this is called a hammer. And what this means is the market opened right here. So it opened right here. The bears pushed it all the way down to here, and the bulls pushed it all the way back up here and closed it right there. And a lot of times what will happen is if you're trading weekly patterns, if you're in and out of the market on weekly candles. So for example, you know, you short here somewhere, and maybe somewhere along in this reversal you covered, and then you went long right here, usually when you break above this high here, and then you would be long as of right now. Now the interesting thing about this move, first of all, this is very unusual. I went back and did a little research and actually read somewhere that, let's put this on a monthly chart. So to have this kind of range, so what is range? Range is the amount of movement in the market from high to low. Now of course this information was on the Dow, it wasn't on the S&P, because it had to go back 113 years to find this kind of range on a month in the Dow. So this is very unusual to see the market sell off this much and then rebound right back. What does it mean? I have no idea. I'm not even really sure what it means for our rising wedge. What we can say about it is that we are coming up on the upper bound of this trend line that's provided pretty good resistance. Okay, so we're coming up on that. We made a doji. Dojis are this is a doji right here, this candlestick pattern, and these are indicative of indecision in the market. So there's kind of a tug. You could think of it as like fair value, and then there's a tug. Bulls and bears are tugging either side of the market, and it's really directionless. So that kind of shows an indecision in the market about, should it go higher from here, should it pull back, and so you just get this flat kind of thing happening in the market. Now granted, this is the first day of this week, so it's not technically, it's not a doji until, you know, the market is into next week. So it's not really a doji, but it has a doji look to it. And of course, we'll be looking at it carefully to see, you know, how it develops this week. Now, what you can say about this is a doji, because this is today's candle. And by the way, this is Monday. Wasn't able to make the video over the weekend, so apologize for that. This is Monday. This is today's candle, Monday, November 3rd. And this is a doji. And again, what is significant about where we are right now is we are very, very close to this upper trend line that we extended out into the future. And again, I can't make it snap to that angle, but you can see going back here, this trend line for the most part held. It got up in here pretty high above the trend line fell off and then retested, but didn't get quite as high this time. So we'll see. You know, you could put a resistance box about, let's just move this one rather than draw a new one. A good place for resistance box would be, probably, I would say just in this area. Excuse me, my sinuses are really bugging me, so bear with me. Hopefully I don't get a sneezing attack. So anyway, I would look for the market not to go much higher than what's in this blue box here before it pulls back. Now, again, you know, the uptrend seems to be intact, so it could pull back and then just rip to the upside. If we get significant market action above this line here, I think what we have to say is that this rising wedge is no longer valid. And also, if we go over to the Dow, you kind of have a similar effect in the Dow. You know, we had this smaller wedge here pattern in the Dow that actually broke out. Looked like it was going to retest, but then just kept going. So if we get price movement up in this area above where we are right now, I think what we'll have to say is that these patterns are not valid. Now, this is, some of you might be thinking, oh my gosh, this is kind of a weird way to look at the market. I mean, how could it be valid until it's not? You know, that's bizarre. And so, again, what we're trying to do is we're trying to set up a place where potentially we can make a decision. And you have to think a little bit in terms of probabilities, what's likely to happen if you're going to set yourself up for making those types of decisions. Otherwise, again, we've talked about this before, but what happens is the psychology of the market kicks in on you if you're not prepared, and it starts to move against you, and then you talk yourself into staying, and well, it's got to come back, and you know, and sometimes it does, but then sometimes it doesn't. So really all we're trying to do is we're following the market, we're looking at what it's telling us to do, and we're trying to be disciplined about what we see and how we're going to react to what we see. So in the Dow here, this red line, we've talked about it before, is a line that connects the 2000 and 2007 highs. And you can see that currently we're above that line. That line's right here, and the market blew straight through it. Now, last week I added volume to this screen, and let's go to a daily because it doesn't make a lot of sense on a weekly chart. But we showed here where the volume had risen during this decline, and then all through this swing up, volume has declined except for this day right here, which was Friday. Okay, the only reason this is red is because this is the current day. That doesn't mean down volume. In fact, I was something I read was showing similar information, which I thought was interesting. This is from Street Talk Advisors, which is a pretty good little weekly newsletter if you want to look into it. But this is a graph from their newsletter, and Lance Roberts writes it, and he kind of chronicles, the Fed. Now he's assigning, I don't know if you saw it, but this guy Bullard was talking about, well, it's time to remove, QE, and then right down here at the bottom, he starts talking about Bullard. Well, maybe we should consider extending QE, and you can see what Lance is showing is that the market was responding to that talk. I don't know if it was or not. I mean, it certainly looks like it. There's a saying in finance that correlation is not causation. So actually that's in politics too. So, there's no way to really know whether, these comments had this kind of effect on the market. He shows BOJ stands for Bank of Japan. So on this day here, he's saying the Bank of Japan basically, upped the ante on its QE program. And then right here is where the Fed and the U.S. ended its QE program. But note down here, he noted the same thing I noted, that, during the decline, we had rising volume, and during the increase here in the last couple of weeks, we've had declining volume. So, and then he's got he's talking about this is the most overbought right now than we've seen in the past 5 years, and that's pretty amazing, really, that after 5 years we're overbought in less than a couple of 2.5 weeks. So there's a lot of interesting things on this chart. I just thought I would share it with you. And like I said, if you wanted to read Lance Roberts' newsletter, it's called Street Talk. Street Talk Advisors is what they're called, and he has a newsletter that's weekly. It comes out on Sunday evening. All right, getting back to let me go ahead and take the volume out here for the time being, just to make the charts easier to see. So that's the Dow. Let's look at where's my little thing here? Let's go to interest rates, and let's go back to a weekly chart. So we've been talking about this move being potentially the first move off the bottom, this being the first correction after the first move. And so you see a similar thing happen in the bond market here. You had in a decline, you had a pretty steep decline. The market found support on interest rates, and the bulls pushed it back up, making a hammer. And then we had a close above that, and it's followed through. Now I would say if interest rates get above this line right here, and or above, if it can push above, say, 2.5%, then I think interest rates are off to the races. What it might do is it might push up into this area, pull back a little bit, and then go. But I think the low is in for interest rates. This is a pretty strong signal. Now, what's interesting about this is if you go back over here to the S&P 500 or the Dow, it had a long hammer. Does that mean the low is in for the market? I don't know. It's hard to believe that that after 7 years, you launch from here in a new big bull move. But anything is possible, so we'll just have to watch it. Volatility. This was another interesting thing that happened that I heard about in volatility. Either never or very rarely has volatility moved this much in either direction and then completely reversed by almost the same amount. So this is actually unusual too in the market. So there's a lot of unusual things happening in the market. It probably has to do with the involvement of the Fed. There's a lot of manipulation going on right now, or there was, and so you're seeing some of the after effects of that. Maybe it's really hard to say what's causing these moves, but certainly these are very unusual times in the market, and probably is going to lead to some unprecedented volatility here shortly. The euro, you can see the euro is pulling back pretty hard. We talked about it maybe finding support at this line, bouncing, and then maybe rolling back over. We'll just have to watch it and see. The NASDAQ kind of looks like the other markets. It moved down and then it's moved up equally strong. So we're just there's a lot of watching and waiting here. We've got new highs in these markets. This is now a new high. If you look at the Dow, this is a new high. So we got a new We got a new closing high and a new all-time high on the Dow. In the S&P, we have, let's see, we don't have a new closing high, but we have a new intraday high in the S&P today. So, there's some significant things happening in the market. Let's look at gold. This is the same gold chart I've been showing you. We had a move down, or a correction back up, and then a very steep move down, consolidation. We talked about if the market moved south of this line right here, that it was probably going to break out, and that's exactly what it did. Once it broke down through this line, it broke out, retested the line, and now it's broke out again, or it's broken down lower. It's possible that you could see gold go back up into this area and then maybe go lower, but ultimately gold is probably coming down into, let me just draw a box so we can have it on here as a target. Gold is probably coming down. I really need some more information back from this way, but I'm going to guess probably, I'll tell you what, I can't do it real easy. I was going to add some more space here, but I really can't. Whoops, that's not what I wanted. So, yeah, so really even lower than that. We're really talking about maybe, like something around in this area. If I can get it to stick. There we go. So we'll continue to watch that and see if gold comes down into this sub 1100 area, approaching, even below 1,000. So let's look at the U.S. dollar. Dollar's had a lot of action in it. This is likely telling us that interest rates are going to be going up sooner rather than later. You can see, well, let me show you. You can see that over here, you can see the dollar's got a high over here from 2010, and we're fast approaching. We'll probably take out those highs, so you'll probably see the dollar get up around 90 before it turns back in a correction. And this is going to start hurting the market at some point. I mean, maybe it's got to go a little higher before it starts hurting the market. But a lot of these multinational corporations, their money is made overseas, and a strong dollar in a multinational company hurts their overseas profits. Now, makes their profits here better, but overseas it makes them not as good. So we'll just have to watch that. There's just a lot of watching. I mean, to me, this feels, it's great if you're in, all the fear's gone, but it feels a little like, to me, it's trying to sucker everybody in. If this hits resistance and rolls over, it's probably going to, we're probably just going to swing right back down into this area. It's probably, as fast as this is going up, it's probably going to go down equally fast back down into this area. So I'm not so sure this will stand, but it could. We do have a lower low, but now we have a higher high. So this is really unusual, but it does happen. The market, this could be something of larger degree, kind of pulling back, and you have to respect it. It doesn't make sense to be short or out of the market when you have, a really strong move like that. You just got to watch it and see what happens. Anyway, that's it. So I don't start sneezing, I'm going to go ahead and end the program right now. As always, forward the YouTube links to your friends, family. You can follow me on Twitter at InvestorClass. And comment on the YouTube channel. Bring up topics, whatever you guys like to do. We can talk about here on the Middle Class Investor. I never did figure out a good way to look at the FTSE. So I apologize to our UK friend. It turns out the chart I was looking at was like a year and a half old or something, and there was no new data on it. So I apologize for that. If you've got another way of viewing the FTSE, and it could be, I'm using Thinkorswim, which is TD Ameritrade's platform. It could be that Thinkorswim doesn't show the FTSE real well or something. I'm not sure. But if you've got another method for showing the FTSE, I'd be happy to bring it in here and talk about it. It sounds like we're kind of on the same page. We're looking for this rally to end, my UK friend, and we'll just see. I mean, we could be wrong. So that's part of investing in the market, is sometimes you're wrong. All right, everybody, thanks a lot for coming in and viewing the video this week, and we'll see you guys next week. Take care. Bye-bye.